Hi, I'm Jaime Agostino, VP of Sales, Marketing, and Education with Vizo Financial. And this is your FOMC update for December 2023 meeting. At its latest meeting, the FOMC chose to leave the target Fed funds range unchanged at a level of 5.25 to 5.5%. And they also maintained the rate and the reserves balance at a level of 5.4%. The decision was a unanimous one and was widely expected by the markets. The post-meeting statement changed very little. The committee indicated that growth had slowed from its strong third quarter pace and that inflation had eased over the past year. When talking about additional policy firming, the statement added the word any before additional in any effort to signal the committee may be at the top of the rate cycle. The markets were looking to the December summary of economic projections for further evidence of where the FOMC expects rates to go. The dot plot in the new SEP indicates 3 25 basis point cuts in 2024 versus 2 in the September projection, though September's projections also included a 25 basis point increase before the end of 2023 that did not materialize. That means the median projected rate at the end of 2024 is 50 basis points less in the December projection than it was in the September projection. This is further evidence that the committee thinks it may be at the top concerning rates. We'll see what additional information Chair Powell gave us in the press conference after the break.
The threats are here. The attacks are coming. Get ready to defend. Vizo Financial is bringing more power, more expertise, and more support to cybersecurity than ever before. We've partnered up with Defense Storm to offer a suite of solutions that will take credit union cybersecurity to the next level. Detect, monitor, and respond to cyber threats in real time with the help of cybersecurity and cyber fraud. Manage all of your cybersecurity programs with the all-in-one grid system. And know that you have expert eyes on your networks 24/7 with the Track Assistance team. Cybersecurity is a risk you simply can't leave to chance. Strike back. Protect your credit union with Vizo Financial and Defense Storm Cybersecurity Solutions.
Welcome back. Chair Powell started the press conference with his prepared remarks. He indicated the economy had slowed substantially from the third quarter, that the labor markets remain tight and is continually coming into better balance, and that inflation has eased over the past year, though it is still above the committee's long-run goal of 2%. He said the committee believes its policy rate is likely near or at its peak for the current tightening cycle. However, the economy has surprised in the past, and the committee is prepared to tighten rates farther if needed. He stated that the committee will continue to make decisions meeting by meeting based on the totality of incoming data and their implications for the outlook concerning economic activity and inflation, as well as the balance of risks. In the Q&A session, Chair Powell explained the committee is still tackling the question of how high to raise rates, but they are now also starting to think about when will it be appropriate to cut. As in the past, he said it is too early for the committee to declare victory over inflation, and they are still trying to decide if they have done enough. However, he also said the base case no longer includes rate hikes. Though the dot plot has changed to include more cuts next year, as he has done in the past, the chairman explained that the dot plot is not a plan and only indicates committee members' thoughts at a point in time. Further, he explained that the projected rate cuts do not necessarily mean the FOMC is projecting weakness in the economy next year. On questions concerning inflation, Chair Powell said he welcomes the progress on inflation, but still needs to see more continued progress as there is still a lot of uncertainty moving forward. He also said he believes the economy is in a good place where inflation has come down without significant job loss, though he mentioned that a recession could still not be ruled out. So as long as things go to plan, it looks like we are at the top of the rate cycle and we will see rates starting their decline next year. The markets want to believe it will be March, though it may make more sense to think about mid-next year as a start given the FOMC wants to see more sustained progress on inflation, and they have said in the past they do not want to ease too early. However, Chairman Powell also mentioned in his press conference that the committee is aware of the risk around hanging on too long before starting to ease. That is what's tough about this part of the rate cycle. There is a thin line between too much and not enough. That's the FOMC update for December. Thanks for watching, be well, and happy holidays.